You know, in the world of high finance, you've got your investors, and then you've got your agitators. We're talking about people who don't just buy a piece of a company, they demand to help steer the ship, sometimes by literally grabbing the wheel and forcing a sharp turn. Today, we're going to dive into one of the most effective and, let's be honest, most feared of them all, Sir Chris Hohn.
I mean, just imagine having the nerve to write a letter like this, not to some small company, but to Alphabet, Google's parent company, and then publishing it for the entire world to see. This right here, this is the signature move of Sir Chris Hohn. It's direct, it's aggressive, and it's aimed right at the heart of one of the most powerful corporations on the planet. This isn't just investing. It's like a declaration of war on corporate waste.
A move like that, well, it just begs the question, right? Who is this guy with the capital and, frankly, the guts to publicly take on the giants of industry? To really get a handle on his power, we need to look past the splashy headlines and into the mind and the methods of the man himself.
So let's do it. Let's meet the main character in our story today. He's a man of some fascinating contradictions who has absolutely mastered a very specific and very powerful form of investing. On paper, Sir Chris Hohn has that classic blue-chip background. Harvard MBA, founder of a massively successful hedge fund called TCI. But what's really fascinating here is the dual identity. On one hand, you have this ruthless billionaire investor, and on the other, a knighted philanthropist. It's that combination that makes him such a compelling figure. In the source of all his power, it comes down to this one concept, shareholder activism. Look, this is not passive, sit-back-and-wait investing. It's all about buying a big enough piece of a company that the board of directors has to listen to you. And if they don't, well, you make them. The goal is actually pretty simple. Force changes that will make the company more valuable for all the shareholders.
So how does he actually do it? Well, like any great strategist, Hohn has a playbook. And understanding that playbook is the key to understanding how he consistently pulls in these huge returns. It all starts right here. In his own words, Hohn isn't chasing hype. He's not after the next big thing. He is looking for businesses with what Warren Buffett famously called moats. Those deep, sustainable advantages that make it difficult, if not impossible, for competitors to even try to attack them.
Now, this is where it gets really interesting, because Hohn's whole philosophy kind of turns conventional wisdom on its head. He totally ignores short-term metrics and, high growth just for the sake of it. Instead, he focuses on just a few high-quality businesses he can understand deeply, and he plans to hold them for 10, maybe 20 years. He even avoids entire sectors he calls bad industries, like banks, because he sees them as too leveraged and too opaque to really know the risks. For his long-term approach, that's a total deal-breaker.
And here it is. This is his secret weapon. Hohn believes activism is this incredibly powerful tool that almost no one else uses because, well, they're scared. They're afraid of the bad press, the legal fights, the career risk. Chris Hohn isn't. He sees their fear as his opportunity. So the whole method breaks down into this four-step process. First, find a great business that's just being poorly run. Second, buy a big enough stake so they absolutely can't ignore you. Third, apply intense pressure, both behind closed doors and with those famous public letters. And all the while, you frame your argument around one simple objective, creating more value for everyone who owns the stock. I mean, it's a super confrontational, high-risk strategy, right? So does all this agitation and pressure actually deliver the goods?
Well, the numbers kind of speak for themselves. In 2019 alone, TCI generated $8.4 billion in profit. That was a 41% gain in a single year, which just crushed the market average. So yeah, the playbook doesn't just work, it works spectacularly. To really see this playbook in action, we've got to look at a classic TCI campaign. It was this high-stakes battle over a multi-billion-dollar corporate merger over in France. The target was Safran, a huge player in the aerospace industry. Back in 2017, they announced this massive deal to acquire one of their competitors, Zodiac Aerospace. But Chris Hohn saw a big problem. And this just illustrates the playbook perfectly. TCI swooped in, bought a 4% stake, and immediately went on the attack, arguing Safran was massively overpaying. And they didn't just complain either. They threatened to sue the board members personally and started lobbying French financial regulators. And guess what? The pressure worked. Safran caved, they canceled the original deal, and they came back with a much lower price. The result? 90% of the shareholders voted for the new, cheaper deal, saving the company billions. But just when you think you've got this guy figured out, just when you think he's a purely profit-driven corporate raider,
the story takes this really fascinating turn.
Because it turns out the same man who threatens CEOs and makes executives sweat is also one of the largest and most committed philanthropists on the entire planet. And this isn't some side hobby, it's a core part of his identity.
The scale of this is just staggering. According to one study, top hedge fund managers, Hohn included, have donated or committed nearly half, 45% of all the performance fees they've ever earned. We are talking about billions and billions of dollars being funneled into charitable causes, funded directly by the profits from these aggressive strategies.
And maybe, just maybe, the activist himself is evolving a little. In a recent interview, Hohn was reflecting on his own approach, and he suggested that persuasion might ultimately be more powerful than just pure confrontation. It's a really interesting sign of a strategist who never, ever stops learning and adapting.
Which brings us right to the final crucial question. Are figures like Chris Hohn a necessary check on complacent, underperforming corporate boards, or are they just disruptive bullies driven by profit at any cost? The answer, as always, is probably somewhere in between. But one thing is for sure, in the modern market, you ignore these guys at your own peril.